A new chapter has begun. A leader's handshake. The world is stunned, a pact whispered in the corridors of power. China has accepted Saudi Arabia's bold new offer, and with it, the balance of global power begins to tilt. What follows could reshape economies, redraw alliances, and set the world on an irreversible new path. Stay with us. The consequences are more profound than you can imagine. Before we dive into this extraordinary development, I urge you, subscribe to our channel, like this video, and share your thoughts below. Your voice matters. Help us continue delivering powerful, world-shifting news and analytics. Stay alert. Stay engaged. In an unprecedented move, China has formally accepted Saudi Arabia's offer to establish a joint economic and strategic cooperation pact. The offer centers around deepened energy collaboration, expansive infrastructure investment, and, most crucially, a move towards greater trade conducted in Chinese yuan instead of the US dollar. This agreement, finalized after months of intense negotiations, marks a pivotal shift in global geopolitics, a direct challenge to the decades-long petrodollar system that has underpinned American economic dominance since the 1970s. The offer and its immediate impact. Saudi Arabia's offer to China wasn't merely a commercial transaction, it marked the beginning of a profound geopolitical and economic shift. In a landmark agreement, China pledged over $250 billion in investments to support Saudi Arabia's ambitious Vision 2030 projects. These investments span a wide range of sectors, including the development of NEOM, a $500 billion futuristic city powered by renewable energy, and the creation of AI-driven industrial zones aimed at turning the kingdom into a global tech hub. However, the true seismic shift came with the oil pricing agreement. For the first time in modern history, Saudi Arabia agreed to price a significant portion of its oil exports to China in yuan rather than US dollars. This move directly challenges the petrodollar system that has underpinned global energy markets for decades and served as a pillar of American economic influence worldwide. The financial markets responded immediately and dramatically. The US dollar, long seen as the world's unshakable reserve currency, faced noticeable pressure as traders and central banks began reassessing currency risks. Gold, often a haven during times of uncertainty, experienced a sharp spike as investors sought to hedge against potential dollar volatility. Meanwhile, oil markets became electrified with a surge in futures trading based on yuan-backed contracts, introducing new complexity into the global commodities arena. Beyond the immediate financial reactions, the psychological impact was even more profound. Saudi Arabia's pivot signaled to the world that the kingdom is willing to diversify its alliances and challenge traditional financial norms. China, eager to internationalize the yuan and reduce its dependency on the dollar, embraced the opportunity with open arms, further strengthening its foothold in the Middle East. Global policymakers are now grappling with the potential long-term consequences. A weakening of the petrodollar could erode American financial supremacy, making it harder for the U.S. to finance its deficits and exert economic influence through sanctions. Meanwhile, countries like Russia, Iran, and others who have long sought alternatives to dollar dominance view this development as a significant victory. Saudi Arabia's offer to China, and the resulting pact, represent far more than an economic realignment. They symbolize a tectonic shift in global power structures, one that could redefine international finance, energy markets, and strategic alliances for decades to come. Historical context and economic stakes. For nearly 5 decades, the petrodollar system has been a cornerstone of the global financial order. After the collapse of the Bretton Woods system in the early 1970s, the United States secured an agreement with Saudi Arabia. In exchange for U.S. military protection and arms sales, Saudi Arabia would sell its oil exclusively in U.S. dollars. This arrangement ensured that global demand for the dollar remained robust, allowing the United States to run large fiscal deficits and maintain a powerful global military presence without the immediate financial pressures faced by other nations. The Petrodollar Pact provided stability not only for the U.S. but also for Saudi Arabia, anchoring it firmly within the Western geopolitical sphere. However, global dynamics have shifted dramatically in the 21st century. China has risen as the world's second-largest economy and the largest importer of oil, absorbing nearly 10 million barrels per day to fuel its industries and growing middle class. Against this backdrop, Saudi Arabia's decision to entertain Chinese investment and price oil in yuan is nothing short of historic. It directly challenges the decades-old petrodollar system, creating ripples that could cascade across global financial markets. Should a significant portion of the world's energy trade move away from the dollar, other commodities, and perhaps even sovereign debt instruments could begin to diversify into alternative currencies, weakening America's traditional financial advantage. For Saudi Arabia, this is not merely an opportunistic move. It is a calculated survival strategy. Vision 2030, Crown Prince Mohammed bin Salman's ambitious plan to diversify the kingdom's economy away from oil dependency, requires enormous capital injections and new strategic partnerships. With Western investors increasingly cautious and political tensions occasionally straining ties with Washington, aligning with China offers both financial security and geopolitical leverage. Moreover, Saudi Arabia recognizes that future security and influence may depend on a multipolar world rather than continued reliance on a single superpower. By forging closer ties with China, Saudi leaders are hedging their bets, economically, politically, and militarily, positioning the kingdom as a pivotal player between East and West. The stakes are enormous. A shift away from the petrodollar could redraw the map of global influence, weakening American hegemony and empowering emerging powers. What started as an energy deal could very well evolve into a defining moment in the 21st century geopolitical order. The new geopolitical landscape. The emerging Sino-Saudi alliance is not just a matter of oil and investment. It signals a profound strategic realignment that could reshape the global order. What began as a series of economic agreements has rapidly evolved into a comprehensive partnership, encompassing military, cybersecurity, and intelligence cooperation. Beijing and Riyadh have already agreed to expand joint military exercises, particularly in desert warfare, air defense, and naval operations in the Persian Gulf and Red Sea. Cybersecurity collaboration is also intensifying, with Saudi Arabia reportedly adopting Chinese technologies to bolster its digital defenses, raising alarms in Western intelligence circles about increased Chinese access to Middle Eastern cyber infrastructures. Furthermore, behind closed doors, negotiations are underway for a formal defense cooperation agreement, modeled after China's long-standing military partnership with Pakistan, which includes joint weapons development and training programs. This deepening relationship is sending shockwaves throughout the Gulf. Traditional U.S. allies like the United Arab Emirates, Qatar, and Bahrain are quietly reassessing their strategic options. Many are pursuing a delicate balancing act, maintaining security ties with Washington while simultaneously courting Beijing's economic power. The once unquestioned dominance of U.S. influence in the Middle East now faces its greatest challenge since the Cold War era. The implications extend beyond the region. Russia, often sidelined in Middle Eastern affairs, views this development with quiet satisfaction. Moscow sees a stronger Sino-Saudi axis as a critical step toward the realization of a multipolar world order, one where American power is diluted and global leadership is distributed among several competing centers of influence. In response, the United States faces a difficult decision. Should it escalate efforts to reassert dominance in the Middle East, or pivot even more aggressively toward countering China in the Indo-Pacific? Either choice carries significant risks. Abandoning the Gulf would cede critical geopolitical ground to rivals, but overcommitting resources in the Middle East could weaken U.S. posture in Asia. One thing is clear: the traditional rules that governed global alliances are crumbling. Trust, once rooted in decades of cooperation, is being eroded by new realities of economic interdependence and strategic diversification. Saudi Arabia's pivot toward China is not an isolated event. It is part of a broader global movement toward recalibration, uncertainty, and the redefinition of power itself. The world is watching, and the stakes could not be higher. Economic and infrastructure ambitions. The deepening partnership between Saudi Arabia and China is poised to redefine the economic map of the Middle East, and potentially the world. At the center of this transformation lies infrastructure, the arteries through which influence, trade, and capital will flow for decades to come. China's Belt and Road Initiative, BRI, its massive global infrastructure and investment strategy, will now gain a critical Middle Eastern stronghold. Saudi Arabia's geographic position, straddling Europe, Africa, and Asia, offers an unparalleled advantage. Positioned at the crossroads of three continents, the kingdom is perfectly situated to serve as a logistical and economic hub for global trade routes. Massive Chinese investments are already being directed into Saudi ports along the Red Sea, high-speed railways linking key industrial zones, and new airport expansions aimed at making the kingdom a global aviation transit center. This strategic intertwining of Chinese capital and Saudi ambition ensures that both nations benefit. China secures faster, more secure access to energy and global markets, while Saudi Arabia accelerates its Vision 2030 goal of diversifying its economy beyond oil. At the heart of this partnership is NEOM City, a $500 billion mega-project designed to be the world's most advanced urban center. The city promises to feature autonomous vehicles, vertical farming, artificial intelligence integration, and zero-carbon energy systems. Major Chinese companies in tech, construction, and energy are now slated to be key players in NEOM's development. From 5G networks to AI-driven smart grids, China's technological footprint will be deeply embedded in this city of the future. In return, Saudi Arabia secures guaranteed long-term oil demand from China, the world's largest energy consumer, even as Beijing moves cautiously toward a greener economy. This ensures that Saudi oil revenues remain robust during the global energy transition, giving Riyadh the financial breathing room needed to transform its economy. The broader implications are profound. The convergence of Saudi infrastructure ambitions with Chinese global strategy signals the emergence of new economic corridors that bypass traditional Western-led routes. As these projects mature, supply chains will shift, trade patterns will be redrawn, and the Middle East may find itself less reliant on US and European partnerships. The fusion of Saudi Arabia's geographic leverage with China's investment power marks a turning point, one that could reshape global trade, energy, and diplomacy for generations to come. Global reactions and risks. The seismic shift in Saudi Arabia's economic and strategic orientation toward China has sent shockwaves through global capitals, none more so than Washington. Alarm bells are ringing at the highest levels of the U.S. government. Top American officials have issued stern warnings to Riyadh about the unintended consequences of its pivot, hinting at a possible reassessment of defense commitments, a thinly veiled threat to the long-standing U.S.-Saudi military partnership. For decades, U.S. security guarantees have been a bedrock of Saudi defense policy. Now those assurances appear increasingly uncertain. In Europe, the reaction is far more conflicted. European capitals find themselves caught in a strategic bind, economically entangled with China through trade and investment, yet strategically tied to the United States through NATO and long-standing alliances. While some leaders advocate for pragmatic engagement with the new Sino-Saudi axis, others warn that closer ties could deepen Europe's vulnerability to geopolitical instability. The European Union, already cautious about China's expanding global influence, is quietly debating how to recalibrate its policies toward both the Middle East and Beijing. Meanwhile, financial markets are responding with both caution and recalibration. Central banks in emerging economies are accelerating their de-dollarization strategies, increasing their yuan reserves, and seeking alternatives to the US-dominated SWIFT payment system. This momentum could fundamentally alter the global monetary order, diminishing the dollar's dominance and empowering China's currency on the world stage. However, the risks associated with this new partnership are substantial. For Saudi Arabia, over-reliance on Chinese capital and markets could expose it to political pressures from Beijing in the future, pressures that may conflict with Riyadh's broader regional ambitions or sovereignty. History offers countless examples of financial entanglements evolving into political leverage, and Saudi policymakers are keenly aware of the dangers. Similarly, for China, greater involvement in the Middle East could prove to be a double-edged sword. The region's notorious volatility, ranging from sectarian conflicts to shifting alliances, could ensnare Beijing in crises it traditionally prefers to avoid. China's foreign policy has largely emphasized non-intervention, but deeper economic and security ties with Saudi Arabia may make that position increasingly untenable. In this high-stakes realignment, every gain carries a hidden risk. Both Saudi Arabia and China are betting big, and the world is watching to see whether their gamble will reshape the global order or ignite new uncertainties. The road ahead, the path forward for the China-Saudi alliance, will not be smooth. Major trials and challenges lie ahead that could test the strength and resilience of this emerging partnership. Oil prices, already subject to global market forces, will likely experience heightened volatility as geopolitical tensions escalate, and new trading mechanisms, such as UN-backed oil futures, reshape traditional dynamics. Market fluctuations could pressure both economies, especially as the world's energy transition gains speed. Political rifts, too, are inevitable. Saudi Arabia's complex relationships with neighboring Gulf states, Iran, and Western powers may clash with China's diplomatic priorities. Differences in political systems, governance models, and regional ambitions could strain cooperation over time. Saudi Arabia remains a monarchy navigating a deeply conservative society, while China projects a centralized, technocratic model. Bridging these differences for long-term strategic alignment will require careful diplomacy and adaptability. One thing is certain: Washington will not remain passive as its influence in the Middle East wanes. The United States has deep-rooted economic, military, and political interests in the region, and the erosion of the petrodollar system strikes at the core of American global power. Already, there are indications that Washington is considering punitive economic measures, diplomatic pressure, and renewed security engagements with other regional players to counterbalance China's expanding footprint. Despite these looming challenges, the broader direction is unmistakable. The era of a unipolar world dominated by a single superpower is ending. A new, fragmented, and contested global order is taking shape, one in which multiple centers of power compete, collaborate, and coexist in a complex web of relationships. The China-Saudi Pact is not just a bilateral agreement. It is a powerful symbol of this transformation. Both nations have significant opportunities to reap substantial rewards from this partnership. Saudi Arabia gains access to vast pools of investment, advanced technology, and a guaranteed buyer for its most crucial export. China secures energy security, expands its geopolitical influence, and challenges the Western-centric global order. Yet the risks are equally monumental. Missteps could lead to economic shocks, diplomatic isolation, or entanglement in regional conflicts. Both leaders, Crown Prince Mohammed bin Salman and President Xi Jinping, are placing bold bets on a future they hope to shape rather than simply endure. In the high-stakes chess game of 21st century geopolitics, fortune, as history shows, often favors the bold. But only time will reveal whether this daring move cements a new era or unleashes unintended consequences neither side can fully control. The acceptance of Saudi Arabia's offer by China is more than a headline. It is a defining geopolitical event. It heralds a new era where energy, currency, technology, and defense alliances are up for renegotiation. An era where old certainties fade and new possibilities and perils loom on the horizon. The world is watching. The world is shifting, and nothing will ever be the same again. If you found this analysis vital, don't let the conversation end here. Like this video. Share it with others passionate about world issues. Comment below. Your perspective is part of this global dialogue. And most importantly, subscribe for more world-changing news, geopolitics, and analytics. Stay awake, stay ahead.